As far as outlook on precious metal is concerned, in spite of the fact that dollar index has risen from 88 to 94, US 10-year bond yields have risen, we have seen in spite of whatever is globally going on, the investment demand of gold continues to remain slack. But we are of the view that the second half of the year, the outlook for the precious metal looks very bullish due to the rising volatility in global equity markets and in fixed income market. Number two, geopolitical tensions which continue to hover, trade war tension continue to hover, and the biggest reason for us to remain bullish is rising US fiscal deficit, and that is something which people are not talking about right now and which is eventually likely to weigh down on the US dollar. So rising US fiscal deficit, high valuation in equity markets, safety buying likely to resume in second half of the year. So gold, which is hovering right now at $1290-$95 on the CME, and in India which is hovering around 30,300, is likely to move up sharply, and we are expecting gold to test $1,400 by December 2017 or perhaps $1,450 in by March 2019. So very bullish outlook on gold. And as far as the other metals are concerned, silver also looks very bullish in precious metal. Silver we recommend to go long at the current level 40,000, 40,500, and expecting silver prices to move up and test levels of 42,500, 43,000 by the December. So on one hand we have rising US interest rate, which is eventually bearish for the precious metal, but the fact is that there are other factors also which is governing the precious metal market, and we believe that the second half, in spite of the US rate hike, the dollar index is likely to weaken. So gold and silver both looks bullish to us. When it comes to outlook of base metal, we are very selective and we are very bullish on few pockets rather than the entire complex. Copper, we are not very bullish. Copper, the concentrate supply is rising in China. The refined production of copper is rising. The inventories are likely to pick up in months to come. So copper around 475, 480 is a good levels to go short. Stop loss should be placed around 480, 990, and expect copper prices to test levels of 460, 455. We are bullish on nickel. Any decline in nickel is a good buying opportunity. The electronic car revolution is really picking steam in China. Chinese electronic car production is rising exponentially. So nickel, for the battery demand point of view, for the restocking of the battery demand, I think is very attractive. 970, 950 is a 950 to 970 is a good buying range. Again, we are expecting nickel prices to move up and test levels of 1050, 1060 in next 1.5 month. Lead also we are very bullish. China is turned net importer of scrap and the refined lead. So lead looks bullish. One can go long at around 165 for the upside target of 175.